Welcome everybody. In this short video, we're just going to look at one of the key decisions, not only of the week, but of the month, as the 12 voting members of the FOMC start their two-day meeting in the US to make a decision on what's going to happen to US interest rates. Let's give you some background on what's happening and why, and of course, what could happen next, most importantly, and the implications for you as a trader. On to what might happen at the end of the meeting. Well, the decision is released Australian Eastern Time around about 6 a.m. on Thursday, with the press conference occurring with Jerome Powell around about 30 minutes afterwards. If we look at the CME FedWatch tool, which is very worthwhile keeping as one of the resources you look at, you can see it's virtually completely priced in that there will be a cut, nearly 90% chance. And you can see that's risen over the last week. It was 86 a week ago and 66 a month ago. So as the month has progressed, more data's come in. We've seen soft jobs data. Even though inflation data has proved to be a little sticky, it provides an interesting balance for the Fed, who are always trying to balance their rate decisions around what is good for the economy versus what is good in terms of trying to bring inflation levels down. So this 0.25% has been pretty well telegraphed. And so the debate isn't really now whether there'll be a rate cut on Thursday morning, but rather what may happen in January. So when Jerome Powell starts to speak at the press conference, with that cut being so priced in for December, the major impact will be on the expectations for a rate cut in early 2026, gauged from what he's saying, whether that narrative is hawkish or dovish in terms of another potential 0.25%. You can see here on the target rate probabilities for the 28th of Jan meeting, we have only a 22% chance at this stage that there will be a subsequent rate cut. So that's what the markets will be looking at. Not only has there been a cut in December, but also does this figure change at all? Let's put it into context. Last time there was a decrease in the likelihood of a Fed rate cut. Then we saw markets pull back up to 10% on the Nasdaq and up to 6% on the S&P 500. So it is something that's very much on market minds. So what could this mean for you? Well, the dovish narrative is likely to support a potential retest of record highs. For US equities, we'll see weakness in the USD and probable support for up moves in both gold and potentially cryptos as well, which has also been under a little pressure lately. The more likely, I would suggest, is potentially a hawkish narrative suggesting that it may be data dependent with little movement in the expectations for January. If that's the case, it may well result in a risk off market response with USD strength and notable weakness in growth stocks, particularly, of course, tech stocks. May even threaten the potential for a so-called Santa Claus rally as we move nearer to Christmas. So it is really a key point. Additionally, of course, it's probably going to upset President Trump, who's very keen on lower interest rates, obviously, to make his economy feel a little better than perhaps it is in reality. And how do you position pre-release? Because chances are that many of you will have positions open and you've got a decision to make. And so essentially you've got three choices. First of all, you could reduce it with partial or full closure of position. Partial closure is quite a popular tactic to use at this time, simply because what you're doing is you're saying, right, okay, we'll take some risk off the table. We're quite happy to stay in with some of our position in case markets rally. Some would just prefer to ride it out, accept it is what it is, and then manage it subsequently. And another method that some people use is to tighten stops. You've got to make the right decision for you and your situation. And then, of course, we watch for the dust to settle. And you can pop in to the live GoToWebinar and YouTube stream on Thursday lunchtime, where we're going to unpick what has actually happened, our live market update. I hope that's been interesting, useful. Be prepared, and we'll see you again soon. Bye bye for now.